Corey. Hi, everybody. I'm Debbie Denny with Hawkins Ash. I Advanced Certified QuickBooks ProAdvisor and certified online also. We're going to talk about month end today and things that we should be doing. I'm going to do a quick overview of what you should be looking for and what you should be doing before I jump into some of the questions that were sent in. Some of the questions were very specific, so on those questions, I'm going to have to ask you if I could email you back on those because they're not going to pertain to the group. But I will try to touch base on all of the questions that I did receive in. So with that, we're going to get started. And what I'm going to do, I'm going to be working in the sample company of QuickBooks and showing you kind of how I would go about doing a month end. So first of all, I am going to look at my financial statements. I'm going to run a profit and loss for the year, or for the month. Let's just do last month. And a balance sheet for last month. And the main thing I'm going to look at is the balance sheet, but I'm also going to, on my profit and loss, I'm going to customize the report and include the previous year so I can take a look at any discrepancies or big swings. So with my balance sheet, if you do keep a petty cash, that I would suggest reconciling at least quarterly. If you have a lot of people in and out of your petty cash, if not monthly, do it quarterly. And there are some really nice spreadsheets out on the internet. If you just Google petty cash spreadsheet, you should be able to find a really nice expense category spreadsheet out there that you can keep track of the petty cash that was used for office expenses or postage or lunches, things like that. So going down your balance sheet, that would be the first item. The second item is your checking account. Now, normally you're going to wait until after you have your bank statements to close out the month. So once you've got your bank account reconciled, going to Banking and Reconcile. And of course, I don't have it reconciled for this year or for this month. So you're going to put in your ending balance, any service charges or interest, continue, and then you're going to check off any checks that came through or any deposits that came through. And again, since this is a sample company, I don't have anything in here right now. See, are all my transactions? I've got November transactions. Let me just take a look and see why that's not showing anything. Because I'm in the wrong checking account. There we go. So when let's say my checking account balance is $62,000. Then here are my checks that would have cleared. I can check those off. My deposits that have cleared. And what you're trying to do is get your difference at the bottom of the window to 0. Once it is 0, that means you've won the game, and QuickBooks will say, congratulations, you have reconciled. Normally, if the difference is less than $1 or maybe even $2, don't waste your time digging for it. Click on the Modify button and either put it in service charge or interest earned. And for that part, put the account to miscellaneous expense. But just don't go wasting your time digging around for pennies or for $1 or $2. $436, which I'm off right now, I would definitely stop and look for. So what I'm going to do now is I'm actually going to look at October so I can show you what I'm going to look for when I'm doing my bank rec. So my bank reconciliation for October is finished. So I'm going to go and look at that bank reconciliation report. Under banking reports, previous reconciliation, you should always have one, my sample company doesn't have it. Okay, one previous bank reconciliation, and on that bank reconciliation, it should have the register balance. And that's what you're going to tie out to on the balance sheet. So when I go into banking reconcile, and so my beginning balance is here. Why doesn't it show me? Sorry about that. I thought this was the sample company I normally use. And yeah, it doesn't have the previous in there. So you're going to want to look at the register balance as of 10/31 and match it with that number. Same with the savings account. You're going to want to match the register balance, not the bank statement balance, but the register balance with what is showing up on your balance sheet as of this date. Your accounts receivable, what you want to do is run your AR aging report. And you want to make sure the date is the same date as your balance sheet. And then you just want to make sure the total matches. $80,935, $80,935. So I know my accounts receivable is good. In your AR aging, another thing you might want to look at is items that are over 60 to 90 days due, and maybe make some collection calls. Because once it gets past 90 days, the opportunity of collecting that is farther and farther away. So just take a look at your AR aging and maybe make some calls if you need to. Then we want to look at inventory. Most companies that keep inventory do a physical count at year end. And when you do that, there is a report in here for an inventory valuation, physical inventory worksheet. If you do inventory quarterly or monthly, you can use that worksheet. And you can also look at the inventory report for the inventory valuation summary, which will give you your inventory as of the specific date. So when I look at my inventory valuation as of October 31st, it's showing my asset value at $25,399, and on my balance sheet it's at $25,399. If there are discrepancies, what you want to do is look at your balance sheet in the inventory asset account. I'm going to double click, and I'm just going to take out that. I'm just going to go one of 23. And I'm going to look for things that might not be inventory related in my type. Since I do match, I know I'm okay. Another thing you can do is in the customized report, you should be able to add a column for the item and/or item description. And it'll show you what those items are. And if you come across one that's blank, you know that that is not an inventory item, and we need to take a look at that and recategorize it. So that's one thing you want to look at. Again, you can customize the report and add additional columns, and I just added the inventory item and the description. Employee advances, I'm not going to go over that because I don't recommend you advance your employees any money. So if you do, let me know. There is a way to reconcile that account and to keep track of who still owes you. If you track prepaid insurance, you're normally going to have some kind of outside schedule, maybe an Excel spreadsheet, you're going to want to tie out to that Excel spreadsheet. And because this is a construction company, I have retainage. And I'm not going to go into that because that's more industry specific. My fixed assets, those are going to be anything you purchased during the year and previous years that you still have. Normally, you can get a monthly journal entry to record depreciation from your accountant, and that's just a journal entry to debit depreciation expense and credit your accumulated depreciation, and we haven't done any for this year yet. So that's one thing you might want to get from your accountant is what's my monthly depreciation figure, because that way your profit and loss will be more in line at the end of the year. Security deposits, that shouldn't change unless you're moving in or out of a building. On the balance sheet also is your accounts payable. Again, in your reports, vendors and payables, you've got your accounts payable aging summary. And again, you want to make sure the date is the same as your balance sheet. And make sure the two numbers match, 42,134, 42,134. And again, if you have any bills sitting out there over 90 days old, you should know why they're sitting out there and have some kind of explanation for that. If you have credits out there for vendors, make sure next time you get an invoice or you're going to pay that invoice for that vendor that you use the credits. If you have a credit card, you want to reconcile that just like you would your bank account. So under banking, reconcile, bring up your company credit card, put in your ending balance, and then check off any charges and then any payments that you've made until your difference is zero. And once your difference is zero, QuickBooks will again say congratulations, but it will also ask you if you want to write a check now or enter a bill for later. And if you just want to leave the balance in the credit card account, you can just click on cancel. And then when you're ready to pay the credit card, you can just write a check payable to the credit card account. Or you can enter a bill and pay it from there. Your payroll liabilities. If you do have payroll, these should match up with what you've actually paid the next month. So if I'm looking at my October liabilities, this is what I owed at 10/31, I'll just double check it by double clicking on it and make my to date 11/30 and make sure that I've paid that in November. So I can see that here's my liability check and that's paid the following month, which it should be. If you're a quarterly payer, you're going to want to check every 4 months. And same with your FICA, state withholding, just double check that those numbers are okay. Sales tax payable, again, the same thing. Your sales tax payable should match your sales tax return for that month or quarter. And here I can see my sales tax payment matches what my liability was at the end of the month. If any of these numbers don't match, you might need to do some digging as to why. Did a check get put in the wrong account? Were my liabilities mixed up and I paid something wrong? Things like that. Sales tax payable, you might have forgotten to take a discount and that sales tax payable might be $10 higher here than what it should be. So those are all things to consider with your payroll liabilities and your sales tax liability. Your loan accounts, which are long-term liabilities, you want to make sure on a monthly basis that you're recording the principal and the interest. So when I'm looking at my loan for my vehicles, this is my opening balance one, so that's probably not a really good example. But let's just say I'm going to make a vehicle payment. I'm going to write a check. When you're writing a check for that vehicle loan, you're going to choose your liability account. Let's say I'm going to make a payment for $500. Well, of that $500, only $450 is principal, and the rest is interest. When you break it down like this, on your profit and loss, it's going to show you the correct interest expense amount. And if you get like a monthly coupon, or if you've got a monthly statement that you get with your loans, you want to tie the loan out to that monthly statement. So the balance on that loan, any difference is going to be your interest expense. On this balance sheet, I see I have an opening balance equity. You never, ever, ever want to have an open balance equity. That means what you did is forgot to include half of your journal entries. With QuickBooks, debits have to equal credits, as with all accounting, and if they don't, QuickBooks will plug the balance into opening balance equity. So what you want to do then is you want to check out what is in here that shouldn't be. If it's maybe a beginning loan, here I've got loans to employees. And again, this is probably just an opening balance here, but technically the credit should have been to your checking account. Or if you've got a loan, sometimes in loans you just put the amount in the register and forget to say, oh, the loan is for equipment, or the loan is for a vehicle, something like that. So if you do have an open balance equity, you're going to want to do some research into that. And if you can't figure it out, feel free to call one of your Hawkins professionals, or you can call myself or Becky, or we have several other QuickBooks ProAdvisors that are in our different offices. A lot of times that opening balance equity can get kind of messy, and we've had a lot of experience in cleaning that up. And your capital stock and retained earnings, those should match what is on your tax return. So capital stock normally doesn't change, and your retained earnings should only change at the beginning of each year. If you're a sole proprietor or a single member LLC, you're not going to have retained earnings. You're probably going to have members' equity. If you're a nonprofit, you're probably going to have unrestricted net assets. Just different terminologies for pretty much the same thing. What the retained earnings account is it is the accumulation of your profits and losses since you've owned the business. So if I look at my profit and loss, and I'm just going to go to the end of last year, and at the end of 2022, I have a profit of $25,542. So when I look at my balance sheet as of 12/31/22, my retained earnings is $36,000. Here's that net income. Now what's going to happen when I change my date to December or January 1st of 2023, those numbers are going to combine. So when I change my date now, it's going to zero out my income from 2022 and roll it into the retained earnings at $61,756. So each year, QuickBooks will automatically do that closing entry for you. And your retained earnings should not ever change, or your members' equity or net assets should never change throughout the year. If that number does change, it means you've gone into a prior year and either deleted something, changed something, moved something into a future year. This is one thing that we see happen quite often, is the retained earnings gets out of balance. So be very careful with the retained earnings account. So make sure that matches your tax return at the end of the year. Let's see. When you're looking at your profit and loss, what I'll normally do with the profit and loss, I'm just going to do this year. Well, let's do previous year too. When I look at this year compared to the previous year, I want to look for some swings, if something's way higher than you think it should be. Like my job expenses in 2021 are really low compared to 2022. Well, I can see that my income is way up in 2022 versus 2021. So I know I'm going to have higher costs. Just make sure it looks normal. So let's go to this fiscal year. I might have more data here. Okay, here we go. So I can see last fiscal year, I was at 168 with $71,000 worth of expenses. And this fiscal year, I'm about 3.5 times that much. What I can also do is add my dollar amount change and or my percentage change, either one. So you can see how much it's changed between the years. So just some options for you to kind of look at as you're looking at the different from year to year balances. And again, if you think, oh, this doesn't look right, my automobile repair and maintenance, I know I had more repairs in 2023. So you might want to dig into where those repairs might have gone. And as you can see, I haven't done any depreciation expense for 2023. Again, that's where you want to ask your accountant, what's my monthly depreciation going to be this year? My insurance, normally every year your insurance goes up, so it's just something normal. Your loan interest, if you maybe paid off some loans last year or took out some new loans this year, you're going to want to make sure that the interest reflects that. Payroll, we had no payroll in 22, we had payroll in 23. So again, just, you know if you had employees or not. And just kind of take a look down the list. Then what I like to do at the end of each month is I'll double click on the net income amount. And what this will do is this will give me a general ledger, more or less. And it gives me all of what the balances are. And what I like to do with this is I will customize the report. And I'm just going to add the source name because that's who I've actually paid or who I've billed. Because being the construction company, I might have job costing going on here. And then what I'll do is I'm going to sort the list by the source name. So that way my source name is in alphabetical order. And I'm just going to go down, because these are all my invoices for my sales, make sure that there's nothing weird. If you see a check type in with your income, something's probably not right. So I normally look at the type as I'm glancing through these. And again, just my income accounts. Here's an inventory adjustment, which is in my cost of goods sold, so that's fine. Now here I'm at my expenses, my job expenses. So I can see I've paid Hawkins construction rentals, the hardware store, and just make sure that, again, that these look right. And I like to put them in source name order just because, if I know I'm supposed to get a monthly bill, I should know I've got, I should have one of these. I'm looking for the whole year, but you can look by month or by quarter. I like to do this on a monthly basis just to make sure I've got everything. I'll run it for the year and make sure I'm not missing an invoice. Like your electric, you'll probably get an invoice each month. So then I'll just make sure I've got 12 of them. And if you don't, figure out why you don't. So that's one thing I like to do. It just kind of gives you a real nice overview of what's out there, and if you think something might be in the wrong category, expense account, or maybe one of these office machines, let's see, I've got 3 of them for the same dollar amount at the end of each quarter. Well, maybe this was some kind of new server I bought or something like that. Maybe it should have been a fixed asset, and I'm making monthly payments on that. Well, then in that case, you should reclassify what you purchased and set up some kind of liability account for the amount that you owe on it yet. And again, my phone should be monthly, my gas and electric, water, things like that should be monthly. And this is a nice way to just make sure that you're accounting for everything. So that just gives me a nice look at what's out there in my general ledger. If you want to look at the general ledger specifically for all accounts, under reports, accountant and taxes, general ledger, and this gives you your general ledger balances. A lot of times what I'll do, again, is sort this by name. Or because it's a job costing company, again, I'll change this to source name and sort it by source name. So that's kind of what I do there. Just to get a really good overview of all your accounts, any big swings. Again, for the balance sheet, you can also look at last year to see where things are. Oh, I'm on January 1st. Let's go. There we go. So it'll give me my year-to-dates. So that's kind of a quick and dirty overview of things you should be looking at the end of each month. Again, the biggest thing is your balance sheet accounts and making sure those reconcile with your external paperwork. Your checking accounts reconciled. If you have depreciation, if you can get that amount from your accountant, do that each and every month. Make sure your accounts payable, accounts receivable tie. Your loan payments match what the bank says you owe. If they don't, QuickBooks can actually do a amortization schedule for you under the banking menu. There is a loan manager, and I don't think it's going to let me do it, but just so it's not going to let me do it. But there is a loan manager, and what you can do is you can put all the details of that loan, which is the date that you got the loan, your first date, the total amount of the loan, and the interest and the term of the loan. It'll ask you all those questions. You put everything in, and QuickBooks will actually do an amortization schedule for you. You can print that out, and each month when you make your payment, just break down the interest and expense accordingly. You think, Becky, I covered it all?
I think you did.
Okay. So what I'm going to do next is to start going through some of your questions, and we're going to hopefully get through all of them that I can. And we will start with what's the most efficient way, shortest amount of time to close the books. Well, again, the shortest amount of time would just be verifying your balance sheet accounts. Then after everything matches, what I would do is then set a closing date. Under company, you can set a closing date, and it's going to open into the preferences. I'm going to set my closing date as of 12/31 of 23. If you have estimates, sales orders, or purchase orders, you can exclude that from closing. That way you can still make changes to those because those are non-posting items. And if you want to set a closing date password, if you're in a multi-user environment, I would definitely say set a closing date password. That way people can't go in and make changes without coming to you and telling you that, oh, I'm making a change to last month. Can you unlock it for me? If you're in a single user environment, you might want to, if you're the only one using QuickBooks, you can leave these open, but set a closing date anyway, because that way if you do make an entry prior to that closing date, QuickBooks will still warn you. So I'm just going to make a closing date here. I'm not going to set a password. So now if I go in and try to write a check, I'm just going to do a fake check here and you can see my date is 12/15/23. My closing date was 12/31. When I'm saving that, QuickBooks is going to say this transaction is in a closed period. And it's going to say, are you sure you want to change the transaction? You can say no, or you can say yes. Without a closing date or without a closing date password, it will not let you. Or if you have a closing date password in there, you have to be the administrator and you have to put the closing date password in order to click yes and make that entry. Actually, you don't have to be the administrator, you just need to know the closing date. So that's how you set a closing date under Company Set Closing Date. And I recommend doing it just so you get those warnings and so you know if somebody's, if you're in a multi-user environment, it's going to track which users has made that change prior to the closing date. So that is the most efficient way to Okay, sorry about that, everybody. I just was informed that we lost audio. So I hope everybody can hear me again. Let's see here. I guess we can hear you, or you can hear me. So I heard Jody in our office yelling, I'm back online. So everything's good now. I'm not sure why that cut out, but okay. So anyway, we were looking at year end or at the end of a quarter or whenever you have a review or comp or audit done, leaving the period open. And again, set your closing dates. When you get those journal entries back, go into company, set closing dates, and take that closing date out, click OK, make your journal entries. Make sure everything ties out to, after your journal entries are made, look at the profit and loss, make sure everything matches. Your net income should match what they had for the audit, comp, tax return, whichever form you're looking at. Once that you make sure that that matches, everything's cool, you can go back in and then reset the closing date. So that way you know everything's good and ties out with any type of compilation or tax return you're doing. Another question, should you be closing out each month or just at year end? Again, if you're going through closing procedures on a monthly basis, just verifying your numbers and things like that, and everything is tying out, I would do it on a monthly basis. It's not going to hurt anything. It's just putting in that date. Here's a good question, setting up memorized month-end entries. If you have the same transaction that happens month after month after month, you can set a memorized transaction for that. And prepaid expenses is probably a good one. So if I look back at my balance sheet for this fiscal year, I know I have prepaid expenses, prepaid insurance. So whatever my insurance is for the year, I will put that into prepaid insurance, and then I will expense 1/12 of that each month. So what you can do is go into lists, memorize transaction list, and in this case, I have my memorized transactions set up. Well, how do you do that? What I'm going to do is just a journal entry. For prepaid insurance, and let's say it's $100 a month that I'm going to expense. And then I'm going to put that to my insurance expense account. Once I have the entry on my screen, and this is the entry I want to have come up each month, I'm going to click on the Memorize button. I want to give this transaction a name. I can automate the transaction if I want to, which means QuickBooks is going to enter it for me. I can add it to reminders list, and I could say do not remind me. I'm going to automate it. How often do I want it to go? I'm going to do it monthly. The next date I want it to post, say it's January. The number remaining, 11. And if you want it to be entered in QuickBooks a few days in advance, you can enter it here. So that's how you would do a memorized transaction. You can memorize pretty much any transaction in QuickBooks. So if you've got a bill that occurs monthly, maybe for your rent, you can choose your landlord, which I'm just going to pick somebody. And your expense could be rent expense. And say it's $1,500. Monthly rent, it's due on the 1st of each month. And if I want to memorize this, I'm going to automate it. And for rent, I'm probably going to want to have that show up maybe 10 days in advance so I know to pay it. Click OK. And now that's going to be in my memorized transaction list. Click Lists, Memorized Transaction List. And here's my monthly rent payment. That'll be added in as a bill. So then to pay that, I'm just going to go into Vendors, Pay Bills, and each month that should show up in there. So monthly memorized transactions are very, very good things to have. It saves some data entry time, and you should be doing those for things that happen on a monthly basis. Some companies have a lot of memorized transactions, so If it's something that'll save you time, go for it. If you have month-end entries like your depreciation expense, something like that, again, do it as a journal entry and memorize that and have that go in monthly. Okay, here's a good one. How to adjust retained earnings from a previous year. So if your retained earnings is off from the previous year, that means somebody has made changes to a prior year. And what I find is the easiest way to fix that is to get the trial balance from the prior.
Oh, lost it. Corey?
Yeah, I hear it.
Can you hear me now?
Yeah.
Okay. Sorry, we're having some phone issues. Okay, so we will keep going. But if you have your trial balance from the prior year, to fix the retained earnings, what you're going to want to do is I will go into reports. Hang on one second. It's going to spin for a minute. Sometimes I click too quickly. And it's going to take a minute here. And sorry, thank you for your patience. Hopefully this will go quickly. Come on. And it's not going quickly. Sorry for the delay. But what I did is I clicked on reports and I clicked on showing the reports in a different way. And QuickBooks is now trying to refresh my screen by showing the reports in a different format. And it's taking a while. So now would be a good time to take a little break. How does that sound? Why don't we take a little 5-minute break and come back at 12:50, and hopefully my screen will be refreshed by then. Thanks for your patience, and let's go for 5 minutes. Talk to you soon. Hello, everybody. I hope you all had a good break. We are back, and hopefully we don't have any more issues. I now have QuickBooks back up running, and I'm going to finish where I left off. How do I adjust the retained earnings when it doesn't match the prior year? So again, what you would do is take the trial balance from 2022, December 31st of 2022, the hard copy that your accountants gave you or however you had it, and go to Reports, Accountant and Taxes, and run a trial balance as of 2022. And I don't like seeing all these zeros, so what I'll do is I'll customize the report, click on the Advanced tab, click on Display Rows. I don't want zeros. Click OK, and it gets rid of all those zeros for me. So then I'll compare this with the trial balance of my accountant, and then do a journal entry to make any changes that you need to make to match the accountant's trial balance. So it's just a matter of matching everything back up. And then your retained earnings should go back to where it should be. And what is the correct label for retained earnings in a nonprofit? Normally that is going to be unrestricted net assets. Let's see, I've got somebody that in memorized reports, one of their balances, let's see, oh, in memorized accounts, the checking account balance match the memorized report. Let's see. I'm not sure if I have that full question. Something about the checking account not matching a memorized report. And I guess I would need to see that memorized report in order to answer that question fully. Then I have a question, cash versus accrual. Does that change anything? I'm in version 2019 of QuickBooks, so I can change my report basis right on my screen. If you're in an earlier version of QuickBooks, you might go into Customize Report, and here's where you can change accrual or cash. And if you want to see them, all your accounts, cash basis or accrual, or all your reports, cash basis or accrual basis, you can go into your preferences under Edit Preferences and go to Reports. And under Company Preferences, you can say accrual or cash. So when you set it up in the company preferences, all your reports will come out on that basis. But yes, it does matter if you're accrual or cash for your financial reporting. A lot of times I will set people up on the accrual basis of accounting just because it's easier to keep track of your receivables and payables. And you might even be cash basis for tax, but I'll still set you up on the accrual basis. And then there's adjustments that we make at year end to switch you back over to cash basis. But it does make a huge difference because right now I'm looking at my profit and loss on the accrual basis of accounting. And I have a profit of $113,000. If I switch this over to cash, my profit goes to $61,000. And what the difference is my accounts payable and my accounts receivable. So on the accrual basis, again, my accounts receivable is $93,000. On the cash basis, it drops down to $55.31. And my accounts payable drops to $13,000 from $26,000. And the reason that it does leave some out there on a cash basis is if there's maybe credits applied to something and a balance is not paid in full. Things like that are why even on the cash basis, the balance sheet accounts will have something in accounts payable and accounts receivable. But it does make a huge difference when it comes down to your income. It's not something you can change that easily. If you're accrual basis taxpayer and you want to go to cash basis, normally with a business, you have to file a Form 2553 change of accounting method to tell the government I'm changing, and it's a big form to fill out. So you just want to make sure that you're changing it from cash to accrual or accrual to cash for the right reasons, and if those reasons may affect you for your taxes. Definitely a conversation you want to have with your accountant about that. Let's see. Specifics on what to look for when tying out the general ledger to the balance sheet and P&L. I kind of went through that already. I can't think of anything more specific you'd want to tie out to. Let's see. Here's a good question. Can you group your customers into specific groups and run reports on them? And definitely you can. And that would be a good thing to run a monthly report on. So when I look at my customers, I've got all these people as my customers. And what you can do in the customer setup is in the additional information, you can have customer types. And these customer types are specific to what you want them to be. So if I add a new customer type, and let's just say I'm going to type my customers, well, let's say just Green Bay, and maybe I'll have another customer type for Appleton, or maybe La Crosse, because that's where one of our offices is. So I've got different customer types now. I've got 4 different customer types. I can run customer reports. Let's see. Let's look at sales by customer summary. And with this report now, I can customize the report, and I should be able to filter it. Let's see. On customer type, and I'm just going to choose something that'll probably have some information in, but I'm going to choose commercial. And here's my sales by commercial customers. And what I can do with this report, under Customize, I'm going to change my header. Sales by commercial customers. So here's that report. And change it to the year-to-date. So these are all my commercial customers and all the sales I've had for them for the year. Now, what I'm going to do is memorize this report so I don't have to keep customizing it each time. So I'm going to click on the Memorize button, and I'm going to save that memorized report in. You want to save it in Customers. If you want to have a separate group called Month End, you can do that. And I'll show you how to do that in a moment. And that's how you can customize the report how you want it and memorize it. So let's say I'm going to, again, go into Customize this, and this time, instead of the commercial, I'm going to want residential. Or if you've got specific locations, you can do it that way also. So here's all my residential customers. I'm going to customize, go to header footer, and I'm going to change this to residential. And again, I'm going to memorize it, and I'm going to say create a new report, save it in my accountant, click OK. And now when I want to run this report again, I can go to Reports, Memorized, Accountant, and here's my sales by residential. And I save the other one in Customers, Sales by Commercial. And if you want to have your own grouping, say I want to have a group that's month end, I'm going to go into my Memorized Report, my Memorized Report list, And I'm going to click on Memorize Reports on the bottom of this window, New Group, and I'm going to call it Month-End Reports. Click OK. And then what I can do is any report I have that I want to run every month end, I'm going to put it in there. So let's say I'm going to look at my profit and loss for last month, memorize, save it in my month-end reports. I want to look at my balance sheet each month. Go to last month, memorize in my month end. I'm going to run an AR aging each month. I'm going to run an AP aging each month. Okay, so then what I can do is at the end of each month, I can go into reports, memorize reports, and here's all my month-end reports. Or I can go into reports, process multiple reports, and I'm going to choose my report group of month-end reports. And I can change my dates here if I want to run a different date range. And if I don't want to run, say, my accounts receivable, I can uncheck that. And then I'm just going to display these. And it's going to bring up all 4 of those reports for me. So that's a nice feature, so you're not clicking to run each report separately. Again, that's reports and then process multiple reports. And again, with these reports, you can also email them. So if your accountant always wants the same reports every month, you can email those to your accountant. And same with any other account grouping. So everything under my accountant will show up here. So memorize reports and grouping them is a really nice feature if you're going to be doing the same things each month. Okay, let's see. What if you have missing invoices? They're missing because you deleted them, voided them. I'm not quite sure how to answer that. So maybe when we get to the point that we take live questions, we can check that out. Can the profit and loss report be changed to revenue and expense? Unfortunately, no. The reports in QuickBooks, you cannot change the main header. Profit and loss, it will not, or will it let you? Let's try it. I didn't think. What you're going to have to do is you're going to have to memorize this then. There we go, revenue and expense. It's still going to say net income at the bottom. So you can rename it revenue and expense, and then you can memorize that. And then bring it up that way. But you can't change it on the canned reports because that's always going to stay the way QuickBooks has it. If I try to change it here, I don't think QuickBooks will let me. It'll let me do it just on the screen. And then when I go out, it's going to change back. But when you do it as a memorized report, there it is. So that's one way around that for you. What reports are needed at the end of each month? Again, depends on what your balance sheet, what type of company you are. Your accounts receivable, accounts payable are 2 reports that you would probably need at the end of each month. What I would also have is the bank reconciliation and your bank statement, the reconciliation report in QuickBooks. Once you've completed reconciling your account, QuickBooks will ask you if you want to print a summary or a detailed report. I will print a detailed report and keep that with my month-end papers. If you've got inventory, I would keep that inventory listing that ties to your balance sheet. So you're going to want your reports, inventory, valuation summary to show that it matches to your balance sheet. If you've got employee advances, you can reconcile that and run a report. I can show you that if you're interested. Leave a message in the questions and I can get you the information to do that. Let's see, if you've got prepaid insurance, I would put your insurance spreadsheet in that file. Bank loans, you might want to make a copy of your statement for your loan accounts so you can make sure those match up with what is showing on your balance sheet. Those are the type of things that you would like to look at a monthly basis, just to make sure they all tie. And those are the reports if you want to keep a binder for each month. Let's see. And the other question is, how do I reclassify an equity account with a balance, but it shouldn't have one? Again, you're going to want to look to your prior year trial balances, or you're going to want to look at that opening balance equity account and try to figure out what happened. Becky, can you think of any questions that you deal with on a monthly basis? Or that you would, procedures that you would do on a monthly basis?
You've pretty much covered them all.
Okay. Well, I think I've covered most of the basics on a monthly basis. So what I'm going to do is I am going to unmute everybody. And if you'd like to ask a question, feel free and I'll try to answer it now. Let's see. Is it unmuting everybody? Okay, I think you can unmute yourself if you've got a question. Okay, I can hear somebody. Anybody have a question?
There are circumstances around this case left him both speechless. There certainly are questions.
Let's see, because I'm not seeing any questions in my question box. Let's see if I've got anything in chat. Nope, and I'm looking for questions. If anybody has any questions, there is a question box on that little link that's showing you that you're attending. It's got a little phone by it and a little screen by it. There's a box in there for questions, and you can ask a question if you'd like, if I didn't cover something that you need to know. Feel free now. Otherwise, we're going to get out of this webinar pretty early. So I'll just wait a few more minutes and see if we've got any questions. Again, I believe I've unmuted everybody. Let's see, or I believe it should let you unmute yourself. And by unmuting yourself, where it shows your name, there is a little microphone to the far left.
Hello.
Hello.
Hi, can you hear me?
Yes,
Hi. Thank you. I finally figured out how to unmute. I had typed in a question in the chat box, but I don't know if somehow you just didn't see it or but my question is that my bank register balance after reconciliation often does not match my balance sheet.
Okay. And you're looking at the register balance? when you're
Right.
doing that, okay, so on the report, you're looking at your register balance. Okay,
Right.
so what you want to do now is on that reconciliation report and the cleared items, are any of the cleared items dated after the bank statement date?
Let me just grab a bank reconciliation to look at. But one of the things I was going to say is that I have figured out that when I void a check, that often will wreak havoc if I
Yep.
have QuickBooks post that journal entry.
Yep.
And so it seems like
one thing you could also do is in reports under banking, you can run a previous reconciliation report. It'll only keep 1 month prior in the regular QuickBooks Pro account.
I have QuickBooks Premier. I'm able to go back quite a few months.
Okay. Yep. Then you can run the report with transaction cleared plus any changes. And it'll give you a new bank reconciliation report that should match. But if any of your transactions are dated after the bank statement date and they've cleared, that will cause your balance to go off, and that's normally what I find happens. Somebody might date the interest or maybe a service charge in the current month when it should be in the prior month.
But have you heard of the void function being such a bear?
Yeah. And normally if you're going to void something, if it's in the current month, you should be fine. But if it's in a prior month, that's where you're going to run into some issues.
Okay, and it's usually always in a separate period, so.
Okay. Yeah, and what you could do in that case, like if you're voiding a check, you could actually do a deposit in the current month, use the same account as that check used. So you're going to do it, say you made a check out to Office Depot for office supplies that you want to void, and that check was 2 months ago. In my current month, I can do a deposit. My account's going to be office supplies. Say it was $25. I'm going to do that as a deposit. So then when you're reconciling, you already have that check out there, and then you can reconcile the deposit with it, so it zeroes itself out. Does that make sense?
Yeah, that makes sense. Otherwise, I've just been doing kind of like a write-off journal entry rather than using the void function.
Okay. Yep, that would work too.
Okay. I've got to run, but thank you so much for your time.
You're welcome. Okay, my questions are coming up now. So let's see. Let's see. And I think I've answered. Yeah, I think that was the only question that was. Oh, okay, here's another question. When creating a credit memo, is there a way to have CM added to the number? This one? The void function one? We're just making sure I'm getting all the questions. Okay, that one I've got. Yep, this one I was just about to work on. Okay, so the other question was, when creating a credit memo, is there a way to have it CM added to the number? And you can only do that manually. So if you're doing a credit memo, here, and you want CM added to the number, you're going to have to go in and manually add CM to the end. It's not going to automatically show up there. But that's how you can do it. It's not going to mess up anything by doing it that way. Any other questions? If you want to unmute yourself, to the left of your name, there is, on the far left-hand column, there's what looks like a little microphone. And if you click on that, it should turn green, and then you can ask the question. Or you can hear me, and I should be able to hear you then. So I'll give it a few more minutes. Let's see if we've got any other questions being typed in. Nope, I've got them all. Couple more minutes, and then I'm going to sign off unless somebody's got a question for me. If there are any roundtable webinars that anybody is interested in the future, if you could let me know what those would be. I'm going to put some information on the screen that will have my contact information. I'll just give it to you in this memo. So if you'd like to get a hold of me, or if you have a question later on, cdenny@hawkins-cpas.com is my email address. Feel free to email me if you've got specific questions. And if I personally don't get back to you, I will have possibly one of my staff get back to you because they are very knowledgeable with QuickBooks also. We have a lot of good people that are QuickBooks pros at our office, and I'm more than happy to help. Okay, and with that, it looks like I have no more questions and nobody is coming on the line. So I'm going to wish you all a good afternoon, and I hope you were able to get some important information out of this webinar. I hope to see you again or hear you again on the next webinar we have. Corey will be sending invites out to that when we have a date and a topic. Thank you for joining us today.